Time for love again. Time for love again.
Good afternoon, everybody. Thanks very much for joining us, and good morning, of course, if you're joining us from the US. For those who don't know me, my name is Richard Betts. I'm the co-founder of Real Asset Media, and we run around 50 or 60 of these events every year. I guess looking at some of the key areas in the industry for those involved in real estate and real assets, looking at both geographies, but also at sectors, and in this particular case, kind of key elements which everybody should be looking at in terms of the investment into real estate. And technology obviously has been a very big growing point of that. The session this morning that we're going to be looking at is on prevention versus reaction and how data control can enable better investment decisions. And we've got super speakers here. Delighted to be working with Plan On Real Estate on this. So we have Klaus Bosma, who's Chief Revenue Officer for Plan On Real Estate. We have Marlene Hanna, who's Associate for Asset Management at Edmund Rothschild, and Dan Bergmans, who's a Solution Director at Plan On Real Estate. And we're going to pick up on some of the points, look specifically at what's happening in the industry, where we see that heading, and some of the solutions and ideas for you. And this is very much designed to be interactive. So if you look on the right of your screen, you'll see that there's an area there for questions and comments. So do please put those in, and we'll make sure we pick those up. First of all, I wanted to hand over to you, Klaus, just to, for those who don't know Plan On, just give a quick introduction of Plan On, and I guess some of the key things that you're also seeing in terms of trends, just to give a perspective to kind of kick off the discussion. Klaus, over to you.
At Plan On Real Estate, and I would like to tell some more about who we are and what we have to offer. First of all, starting by Plan On. Plan On is a software company founded 45 years ago in the Netherlands with a strong focus on corporate real estate and facility management. And in the last 10 years, we also expanded to more commercial and residential real estate. And we distinguish three business lines. We have field services and facilities that are focusing on the end user of real estate, and Plan On Real Estate focusing on commercial real estate and residential real estate. Before diving into the specifics of what we have to offer from Plan On Real Estate, it's good to mention that Plan On is owned by Schneider Electric. And that is for a good reason, because Schneider, of course, I think well known, is focusing on energy intelligence. And that is only achieved if you have an intelligent energy grid, but also use it wisely. And that's where Plan On steps in, because their software enables the customers to make efficient use of the real estate. The other thing worth mentioning is also that we partner with SAP. We have the highest partnership that's called Solex Solution Extension. So we are really integrated into the SAP structure and solutions. From Plan On Real Estate point of view, our payoff is to be in control of real estate today and tomorrow. And we make a split between development, so creating real estate, but also investment side, managing existing real estate. And the first thing to be in control is that you be in control of today, and that is about the operational part. Know what you have running as projects. Are they within budget, within planning? Are you have enough resources to execute? But also managing the process around those activities, and of course report to shareholders, stakeholders, and management. The same for investments. So if you have an existing portfolio with our software, you're able to report, to be in control of your existing portfolio, but also keep track on usage, tenants, contracts, etc. What we add to that is also be in control of tomorrow, and that is all about making the right decisions. From a development point of view, that is about decisions where to invest, what to build, or how to finance your activities. And from an investment point of view, it is all about optimizing your portfolio. You have investments, you have a current situation, but maybe your strategy is something else, and then you have to come up with ideas and plans how to achieve these strategic goals. And of course, reporting is very important in our software offering, and that's what we offer to our customers. We follow in our solutions, we follow the real estate life cycle. It's all about starting with creation or recreation of real estate. That's what we call RED. Once created, we enter the management phase. That's the operational phase as mentioned here. We call it REM, so real estate management. And at the end of the life cycle, it can be turned, hand over to another owner, or it can be renovated or retrofitted to something else. But there's a new stage going on, and that's where a new life cycle begins. In this life cycle, we distinguish different layers. We distinguish layers of operational activities at the outer circle. That's more managing what you have today. So the project that are running, but also the portfolio that you have on a daily basis to report on and to be in control of. The inner circle is more where you want to be in 5-10 years time. So where do you want to be from a financial point of view, financial performance? Do you want to optimize? But also more and more important, we see sustainability optimization, how to make your portfolio more sustainable. That's an end goal set for a long-term period. And the ring in between is how to get from the current situation towards the end goal, how to come up with plans that eventually lead to executing your strategy. And of course, there's more ways to roam, and our software enables you to get a clear view on the different scenarios, but also pick the right one going forward. Final slide is about what we have to offer. Our solutions is built on one platform, one software platform, where we have all the core functionality in the middle, but we have different solutions per domain. So we have real estate projects focusing on real estate development, real estate assets focusing on asset management and portfolio management. And on top, we have real estate finance, where it comes together, those activities on entity level, fund level. On the one hand, consolidating all those activities and create financial statements like cash flows, profit and loss, and balance sheet, but also report on entity level and fund level. We are Plano Real Estate. We are a market leader in the region that we currently serve, and that is continental Europe, so mainly Benelux and the DACH region. Our strategy is to also expand to the new regions, on which of them is UK. Specifically UK, because we see a huge overlap in the way we deal with real estate, so the discounted cash flow orientation. And that's why we also are convinced that our solution have a good fit with market standards. With that said, I will hand over to you again, Richard, for the rest of the dialogue. If there are any more questions, I'm happy to give answers in the Q&A session at the end of this webinar.
Great, thanks very much, Klaas. And interesting, yes, that you're expanding from continental Europe into the UK. And also, I think that life cycle element is quite an important aspect to this as well. Let's just get some introductions as well. We now know you, Klaas, which is great. Dan, let's just start. Quick introduction from you, Dan.
Yeah, so my name is Dan Bergmans. I'm a solution director at Planon. And in the last 5 years, we developed a new product called Planon RE, Assets and Finance, which allows a real estate investor to manage their portfolio not only on the real estate, but also on the fund level. And of course, I think like everybody back home or in the office, notice that AI has made their entrance into our daily life, into our work. So with that trend going on, it's an exciting time to see how AI can speed up the data quality, the forecasting, estimations. So in essence, the profession of a real estate investor. So that's my daily activity. And today I'm going to give you some insights together with Marlijn. So maybe you can introduce yourself.
Great, Marlijn, over to you.
Yes, I am Marlijn Hanne. I work for Edmond de Rothschild, a real estate investment management company where we invest and manage real estate in the Benelux. I'm one of the commercial asset managers where I mainly focus on industrial and offices. And next to that, I'm currently working on how we can, all the data, how we can use that in the best way.
Super. Marlijn, let's start with you if we can. When you're looking at the current market, what makes investment decisions, I suppose, well, are they, what makes them more complex today than than a few years ago?
Well, in the current market, we see that investors have become more critical and are asking for way more frequent updates on the investments that we make. And as a manager, you spend more time on explaining what you're doing, why you're doing it, and what impact you expect an investment to have. And data is playing an increasingly important role in this process. It's essential to be able to quickly create accurate analysis and different scenarios. And having a solid database is the foundation for this all. And relying on Excel spreadsheets and the calculations of that is no longer enough. So, and moreover, it's time consuming and sensitive to errors. So that's why we started as a company searching for a system where we can store and manage all of our data in one place and having one single source of truth, actually. And that allows us to work more efficiently, more precise, and also provides the investors better and faster insights as they wish.
Yeah, that's interesting. And Dan, I mean, if we're looking at data quality, for example, which Marlene mentioned there, and having one true source of data, but data quality, is that still the biggest barrier to AI adoption? You mentioned AI earlier in the introduction, or is AI itself becoming part of the solution? How do you see that?
Yeah, so as a software vendor, I think years ago we always mentioned that garbage in is garbage out, and we don't mean the real estate, but the data, of course. And so if you have poor data, then every Excel, advanced software, whatever doesn't work because the data quality can't be improved if it's just garbage. And now the same principle, I think, applies for AI. So if you give AI data, AI is trained to please a person. Like this is how AI was trained. So it will give you probably the answer that you most likely want, but it can only do that with poor data. So it doesn't solve the problem. And I think last months on LinkedIn, I have seen a lot of advertisement for new startups that offer a tool in order to analyze underwritings that you get from your broker. And with these tools, you can then very fast see what your offering price would be under certain LTV and IRR conditions. And I think all of you have seen them. And so I also saw them, and I was very curious about the workings as a software vendor. So what I did is I tried it out. I have some more advanced tools to my that I can use. And what I noticed was immediately I just drag drop the file in, and it gave me a price I don't remember. It was in London. It was an office. I think around £6 million. And I was impressed about the speed and also the whole detailed analysis that it did. But I don't trust AI. It's in my nature, I think. So I asked it to generate an Excel file. And then it took quite some time. My perception was you already did it, so just hand over the evidence. And then when I looked at that Excel file, the data that I used, it was just all incorrect. It doubled the terminal value in order to calculate the capital value and all these things. And when I saw that, it was I got this strange feeling that we go back into the 19th. So it's people created a lot of Excels. Normally, when we onboard a new client, we always say like, where is the data? And more advanced real estate investors or more professional real estate investors, they have a data warehouse or system. But sometimes you find clients that have 500 different Excels in a folder, and each Excel presents a building. And now we're generating these things with AI, it generates an Excel. And then I had this feeling like, do we end up again with a folder of 500 Excels? But now this Excel was not created by some person within the company that had a lot of knowledge about financial modeling and about data, but by AI, by which each Excel could be different than the last one. So I think like how AI is used today, without validating data, without checking anything, it will just end up, in my belief, with a big pile of garbage. So it's very important to know what's happening to be in control on your data and not just trust AI is going to solve the current data issues that you have.
And question to both of you actually here as well. Obviously there's a lot of discussion about uncertainty in the market itself. Is that your greatest uncertainty, or is it in the valuation of your own portfolio? Let's pick that up with you, Marleen, if we can.
Yes, of course. Well, the political uncertainty and just the broader macroeconomic developments are affecting and slowing down the decision making and also the capital allocation to real estate. So low market liquidity definitely brings uncertainty. However, at the same time, it also creates attractive opportunities for investors who do have the capital available to invest or reinvest. That's also we see the same for at us. So for the SCPI, and there are sufficient comparables to assess new acquisitions and make informed investment decisions, and in particular for industrial and logistics. And thanks to our local market expertise, but also the available market evidence, we are able to understand the asset values and identify opportunities in the current market.
And what's your take on that, Dan?
Yeah, so as Planon, we don't own a real estate portfolio. We are a software vendor. But I think when I look at this question, typically what I see is that people say, like, I have all my data is there and I don't need the expertise. I can just create, for example, a tool with just typing a prompt, and that tool will determine my market value, my investment value. It all does everything for me. And in that side, there was an announcement by the CEO of Microsoft a couple of, I think, 2 weeks ago. He announced that SaaS is that software as a service. So that means every tool that you use now to determine an investment value, a market value, an IRR, it would all be replaced with AI. And I have a feeling that that is not going to work. You can imagine, let's say we have 1,000 real estate investors, and each of them builds their own SAP or their own Planon. And then eventually we will end up with 1,000 systems that were built by AI. We call this vibe coding. Nobody understands the code. Nobody understands what is happening because nobody is a trained developer. And we all trust that AI does everything for us. For me, it sounds a little bit of insane. But yeah, I don't have a glass ball and I can't look into the market what will happen. But I think if you look at that perspective from our own, let's say, market versus our own portfolio, I would say that that real estate investors still have to trust on the expertise, on the tools that are available, and that AI assists them in improving and making better decisions. What I found, for example, is a great way forward is the hybrid approach, in which you use traditional tools, can be your Excel, can be advanced software, and then next to that run AI, or even better, do the things in your Excel or in software for which it's designed and for which it's very good, and do things that you have to do normally manually outside of the software, or typing things in Excel or copying paste. Let's do that by AI. And I think that is the way forward.
Okay, good. I wanted to pick up on that aspect of data control and how that relates to decision-making capability and those elements. So maybe just first of all with you, Dan. I mean, you mentioned having data under control. Mm-hmm. So what does that mean from your perspective? Let's say beyond reports, KPIs. What does it actually mean?
First of all, it's understanding the data definition. So being in control on your data does not mean receiving all the data and storing it somewhere. It's also understanding what's in the data. And a very easy example is a KPI. It's called the gross initial yield. I think everybody knows it. We did an analysis a couple of years ago in which we received a KPI. We asked for the gross initial yield, and we received it from 10 different valuers. The same KPI, gross initial yield. And this is what a real estate investor does, right? They have a real estate portfolio. It's being valued by different valuation firms, and they asked for the data, and they ask for the gross initial yield. So they received them. Each of those 10 valuators used a different definition on the gross initial yield. That was a 200 base point difference purely on definition. But if you as a real estate investor looks at, hey, I got the gross initial yield, so my data is under control. But if you don't understand the data definition, then you are comparing data with purely different definitions. We have a different example with the terminal value or the expiry date of a contract. Totally different definitions. Even different systems use different definitions. So if you don't know what the data means, you are not in control. Let me see. Yeah, so if you look even further, then the thing is that if you are not in control and you don't know what the data means, it can also be conflicted, so that your data set causes conflicts in the sense that maybe rentable units are rented out twice because you don't know the expiry management behind the contract. But the more dangerous thing is when you set up a sort of workflow in which you hand over the data to the next party, and you gather the data and combine it in one file, and therefore change the data structure and also lose the original term of the data, so the field name or whatever, and you move it towards the next party, then that definition is lost forever. And on that, we call that then the data is corrupted, because nobody understands the data anymore. Because the next person in the line in your workflow, they will get only maybe one file which is combined of different data sets, and they look at it and they don't have this information where it's coming from. And at that moment, yeah, you can't make any sense of the data anymore. So I think it's very clean that you know what the data means in order just to understand it, and not just gather it, throw it in AI, and let AI figure it out. I don't think that's the way forward.
Okay, good. Interestingly, Marlene, obviously there's a huge amount of data that is available. And the question in a way is, although there is a lot of information is available, how much of it can you actually use? How much of it is truly relevant to making the sort of decisions that you're having to make?
As a manager, you do combine all the available data to underwrite assets and also for the hold sell analysis. But we also do filter to what could have an impact on our business plan. Not all available data is simple to quantify. So, for example, if you have a 10-year lease contract with a tenant, that's easy to quantify in a cash flow but the fact maybe that the financial situation of that tenant is not that stable anymore, it does not have a direct impact on the cash flow, but it is decision relevant. So we therefore run different scenarios and also sensitivity analysis, and all of that together helps us to make better investment decisions.
Okay, good. And again, question to both, but let's start with you, Declan. I mean, it's interesting there where you can use it to pick up red flags, during due diligence, those kinds of elements. Mm-hmm. Are there typical points in the investment process, I suppose, where a lack of clarity becomes particularly noticeable, or indeed can be costly, of course? Let's start with you, Dan.
I think it starts in the very early stages, in which the analyst receives an underwriting and wants to analyze if this is a potential acquisition for your portfolio. And of course, I never did my acquisition myself, but I have heard a lot of stories that it takes quite some time. This analysis receives a rent roll, has to look in it, has to look at the soft sides of real estate, also the risks involved in the location and the tenants. And I think it starts with this, but you're already investing money in it without being clear if you want to buy this asset, yes or not. So I think a lack of clarity already becomes very costly in the beginning because you don't have all the insights. You're still figuring it out without even deciding to buy the asset. So it can also be a loss directly in the beginning. And something that we are working on at Planon is that we are now doing a POC on proof of concept on data management, in which we use our data management tool that has, I think, around 2,000 data validations in combination with AI to subtract information from an underwriting document and then transform that into a data standard and insert it into our software without you as a human to interfere. So this costly aspect of a real estate analyst to extract all the data, that is all done for you. And then you can focus on the real risks involved in the real estate assets, so in order to decide if you want to buy it, yes or not. What we see later on is in a traditional setup, there is different stakeholders involved in managing a real estate portfolio. So you have your property managers, you have your asset managers, you have control, you have your fund managers. And in a world where nobody uses software and everybody uses Excel, we typically see a folder, and maybe look in your own folder structure, maybe you find a similar structure, is that you have, let's say, version 1, 2, 3, draft final, definitive final, final 2.0, final 3.0. And these are all Excels handed over to the next person. They change something in Excel, it goes back. Formulas get corrupted. So this is a very costly exercise in which nobody is really in control on the data in the investment process. It's just you hand it over. You don't work together on a thing. You work more like I hand it over, you do your thing, and then I will have a look after it. So in software, this is of course totally different because you work in a database. And I think if you use software or you use advanced data warehousing, maybe some connected with your AI model, you can achieve the same, but it's that you work together on your data, that you can trigger data mistakes, which can be very costly in the end of the whole project if you have your budget in place, if you have your investment reports in place, and you find out that some data was not correct. You work together on a data set. And I think this is better than what I see in a traditional setup in which you work in Excel and just emailing this Excel to other stakeholders in order to do the whole investment process.
Okay, good. And Marlene, what's your view on that, in terms of those, whether there are typical points in the investment process where these things become an issue, really?
Well, I fully agree with Dan, and I recognize everything he's saying. For example, our investment process consists of 2 phases. So you have phase 1, there's a lot of uncertainty still, so we have to make a lot of assumptions. And then you go to phase 2, and then more information becomes available. And in addition to your base case, you also make several alternative case scenarios. And at that stage, you need to revise the assumptions made in phase 1, update them where necessary, and also fill in the remaining gaps. And we found out that in the transition between phase 1 to phase 2, that's a critical moment, because there you start making changes, you create new versions, you're working with multiple scenarios at the same time. And this process can be very sensitive to errors. And that's the part that it can become costly, because if important points are overlooked or not consistently reflected across all scenarios. For example, in phase 1, we assumed that the index was capped. And in phase 2, it becomes clear that there's no cap. So you update your base case, but accidentally forgot to remove the gap in one of the alternative cases in phase 2. And this is something small, but that's the inconsistency that can affect the investment decision and even the acquisition itself.
Good. And if we look at sort of prevention versus reaction in terms of how we're dealing with this, look at it from a kind of practical point of view. Marlijn, I mean, for you, when you're preparing for these elements, what does that mean? What does preparation mean in concrete terms from an investor's perspective? At which stage is it decided whether you'll need to react now, react later? How do you see that?
Well, in general, we on a regular basis we analyze the portfolio and determine what should be done and when in order to optimize the cash flow. And in some cases, it makes more sense to delay a certain capex investment, so that can be combined with another event, for example, a tenant turnover or combining regular maintenance with an ESG improvement. So we do use budgeting, lease expiry management, and also the budget versus actuals to assess each asset individually. And this allows us to analyze both the income side and the cost sides to make the right investment decisions and to know when to react. But actually, constant monitoring is our way of preparing for decisions.
Okay, good. And Dan, you're talking to investors a lot of the time. So I guess which questions should investors ask much earlier in the cycle to avoid surprises at a later stage?
Yeah, so the investors that I speak, and I think this is generic for every real estate investor, is that they're all financial experts. Give them a rent roll, they will analyze every pound to the last penny, and they can really generate cash flows and modulate cash flows, do the financial modeling. But what often is being forgotten is that you also have the non-financial part of a real estate asset. It's a physical building in a certain location, and that is of course harder to price. What are the risks involved being that on location? Did you look at the town planning? Did you look at complaints? And I think nowadays with AI you can really scratch that and have a look into it. Some really cool examples were a real estate investor that was invested into leisure hotels, and he asked AI to go to booking.com and search for reviews about complaints in the surrounding area, noise complaints about construction, etc. And based on that, he could easily see in which area was the construction being happening, or was the road very damaged? Was it an easy to access building or not? And if you then use maybe a different agent that goes into the town planning, looks at the soil, environmental situation, all these non-financial parts of a real estate investor, you can take them into account before acquiring a building. And maybe if you look at that, you would make a different decision. Maybe on the financial KPIs, you would say it is a good investment, but due to these non-financial risk, you will maybe decide to think otherwise. And if you don't price them in, if you don't take them into account, maybe later on during your investment cycle, you will, face these non-financial risks, and then you have to deal with them. But if you knew them before, maybe you had taken a different decision.
I suppose that leads into things like, scenario planning. So what do scenarios play? What role, I guess, do scenarios play today? Do you think they're underestimated? What's your sense of that?
Yeah, so and I don't want to take all the credits away from Marlijn because she came up with this answer, but and she will explain a little bit more about how we do this in assets. But traditionally, a scenario is that what if inflation goes up, right? What if I have to spend more capex? What if the market go down and my capital growth is less than I expected? These are traditional scenarios that I see, and you can do a Monte Carlo, what if, you can do multiple techniques on that. But nowadays, it's also that you have to be Paris proof in 2050. So it's not only scenarios based on economic parameters, variables, but it's also about, okay, I have a certain amount of capex available to me that I need to invest into my real estate assets in order to improve the energy consumption, carbon access. How do I do that? And then, of course, scenario play can be used very handy, that you maybe look at an asset and see which measures you can take. I think the CRAM pathway is an amazing tool to start with. For everybody that doesn't use it, you can just download it free online. It's an Excel file. It is a great starting point to view and analyze your portfolio. But then, of course, the question is, which measures do I have to take into account? So maybe isolate the walls, put solar panels off the roof, change the HVAC, whatever. And then I typically see in scenario is that there are maybe 5 retrofits or measures that are technically feasible in the building. And then the capex is entered and the capital growth is entered. So that means, what is the value at the end of the life cycle after I dispose it after 10 years? And then they say, yeah, this is financially feasible or not. But nobody takes into account what it does on your operating activities. So because you invest, maybe next year, your rent can go up, your OPEX can go down. And I think if you take that more into account in your scenario play, that you can make a case which you thought was not financially feasible, suddenly financially feasible, because you take your operational activities into account, which probably will improve due to your capex investment.
Yeah, let's pick that up with you, Marlijn. And obviously, interestingly, of course, we have a platform called Real Asset Impact that looks at decarbonisation, social impact strategies within the built environment, and do a lot of work with CREM. And so, very much seen how CREM has really moved forward as well. But Marlijn, interested to get your take on that as well.
Yes. Well, as ESG is one of the key drivers for your asset value, it becomes more important also in the decision-making process. And so we integrated ESG as part of our underwriting and the investment process. And these scenarios are, play a much bigger role today than ever. And what we are seeing is that the costs that are budgeted for the improvements are being underestimated. So they tend to be higher than expected, but also at the same time, the potential upside of these activities are also underestimated. So higher rents, lower yields. And we believe that active asset management is required to efficiently combine the commercial opportunities with the maintenance and the capex, so we can optimize the returns and also the exit yields. And these effects become very clear, we think, in the scenario analysis, but are not always very clear or well reflected in the traditional valuation reports.
Okay, interesting. And just in terms of that side of things, we're talking about scenario planning. Are there assumptions that, maybe with hindsight, often prove to be too optimistic, or alternatively just too static? Maybe picking up with you, Dan.
Yes, so I couldn't give an answer to this question because, of course, we are a software vendor. But from a software perspective and the data that a client can store, this is something that can be proven or not. So what a real estate investor does, and imagine our software is now on the market because we totally built it from scratch for around a year, 1.5 years. So the data has to prove itself, but an acquisition manager creates their acquisitions in our software. And then the asset manager, once it's acquired, also uses our software to manage the asset on a daily basis. And the moment that the acquisition manager put the asset into our software, he also made assumptions about the next 10 years of the forecast, right? Your income, OPEX, CAPEX, the actual acquisition price, etc. And the asset manager is going to do the same. Maybe he will use the same assumptions. He just takes over the assumption of the acquisition manager. Maybe he takes totally different assumptions. Would be great to analyze as real estate investor and compare what the thought was of the acquisition manager versus the asset manager. And then if we take that part one step further, is that we connect our financial forecast with your results, so your actuals. So you can even say, last year I assumed that I would spend X amount on OPEX, CAPEX, and I received this income. And this was my estimation about an expiry of a contract and the chance that a tenant would leave. And now the year has passed. Looking at the actuals, were my assumptions correct, yes or not? So I think it's also a learning curve that you can see if you are maybe too optimistic or pessimistic about the assumptions that you make. So this is something that we can now do with the software. But let's say in the next 10 years, I'm very curious if we can also do the fact check and see how good we as a human being can assume certain the value of certain variables for the future, or maybe that AI proves to be better. I don't know.
Yeah, I mean it's interesting to be able to go back and see, I think. And Marlijn, obviously we're in a lucky position that you are an investor asset manager, so you can pick up a little bit on that, on assumptions that might be too optimistic, too static, generally good. I mean, what's your experience of it?
Well, luckily it goes both ways. I think it really depends on the type of assumptions. So for some assumptions, the market improvements of the market plays a major role. So that's something we cannot control. It also makes it very hard to predict the assumptions. And we do work with external forecast bureaus to make our assumptions and based it on that. And but you also have assumptions that you have more control on, such as tenants, ESG improvements, and with active asset management and all the available data that we have, we try to predict that as good as possible, and also based on a historical experience. But I think most importantly, maybe, is to get the most realistic assumptions, is the combination of the investment team and the asset management team. Just like Dan already said, the investment team is making the underwriting, but the asset management team has to do it. So you have to work together to get the best assumptions. And also the asset management team is very close to the assets and to the costs and to the budget. So they know exactly what the reality is. So we work a lot together with our investment team and create also these assumptions together.
Yeah, I think that working together as a team is a key element of that, particularly when we're looking at active asset management. Absolutely. I'm going to look a little bit now at the market risk, because obviously that also influences your ability to act, Marlijn. And of course, if for those of you who are watching it live, on the right-hand side of the screen, if these aren't the questions that you would like us to answer, do please put your questions or comments in there, and we'll make sure that we pick up on those at the end of the session here. But Marlijn, let's pick up a little bit on risk. So currently, how do you price risk in your portfolio? Let's drill down a little bit into that area.
Mm-hmm. Well, we start with looking at the current portfolio, so the existing lease contracts and the overall performance. Different stakeholders, they review each contract and assess the risks. For example, the likelihood of a tenant staying or leaving the building, and the time of costs, how much costs, and also, that's all important for how to relet an asset. And across the portfolio, we also factor in the inflation risk, which is a price for both on country level and on city level. And combining that all together, we analyze the forward-looking returns, and that gives us a good idea about the risk versus return ratio. And one of the stakeholders is, for example, the technical asset manager, and he focuses or she on the maintenance costs and the capex, and works directly with the property manager as well. And the process of bringing all these aspects together and risks is quite time consuming, and it requires a lot of input from different people. And just like Dan already said a bit, but before we implemented the asset management system that we have, that was all done in Excel. So we had multiple versions, maintaining by different stakeholders, and to avoid the calculation errors, but also the risk of working with an outdated file already, we decided to work with one single system with all the data in place. It's completely up to date, and everyone who needs access to it has access. So yeah, I think that's the biggest.
Yeah, I think it's interesting. I'm sure at some point everybody's going to look back to the position where there were Excel sheets flying all over the place and think, goodness, how did we manage that? Let's pick up a little bit on particularly AI, how that's coming into the industry. And maybe start with a bit of a provocative one to you, Dan. So would you already trust or entrust, let's say, operational decisions to an AI agent today? Would you do that?
No. And there is a clear reason, is that first of all, you will have an AI model, probably Copilot, which is not designed for that task. For the people who use Claude, it's better, not perfect, but you will often give it the data without any context, and then you will ask a simple prompt and think that Claude or any AI model will somehow understand you, and it can fairly good understand you, and then solve your question based on the data that it doesn't have. It will just start hallucinating and give you an answer. And the reason why most of the real estate investors, and I was in Amsterdam yesterday, and I had a conversation with a real estate investor in the sun, and he was saying, like, I was amazed in what the AI model gave me back. And I asked him what did it give back? A beautiful dashboard with graphs, and there was a map, and I could click on everything. It was not even in Power BI, it was just in my browser. And I said, it was amazing, right? Yes, it was super amazing. It's brilliant. And then I said, like, did you also actually look at the data that it produced? No, step aside from the image that it can generate. It can do that exactly because it's designed to do that. But what about the data? And then he said, like, yeah, it was garbage. And that is the thing. Like, AI can produce the most beautiful things, but it can only do it with the data quality that you can give it. And it can't access all our closed databases that we have created in the real estate market. It can't access transaction database that are closed. So AI can only do it with the things that you're offering it. And then with a simple prompt, often the output is not very good. It looks brilliant, right? But yeah, it doesn't work.
And I mean, there's a lot interesting, and we'll come back on that with you, Klaus. I saw your reaction there. Let's pick up. I mean, we've talked a little bit about AI, but Dan, first with you, and then I want to pick this up with you as well, Marlo. So how do you see AI then change your work in the next 2 years? Let's say let's pick that time window of 2 years. Over
It's
to
better
you, Dan.
it's better than the question to ask me what it will do in the next 10 years, because that I really don't know. 2 years is already difficult. And it's difficult because AI is 3 years old. Actually, AI was designed in the 70s, but there was not sufficient data in order to let it work. But because we just put everything online, AI now has sufficient data, and it was starting up, let's say, last 3 years, in order to actually function and give proper results. But yeah, what it will do in the next 2 years, I probably don't think it will disrupt everything. But if it's going to replace our jobs and do everything for us, and we will just sit drinking a cocktail in the sun, I don't think so. At this moment, AI is an assistant, mostly for people who work with a PC behind a desk. It will start, I think, move into a physical phase in which not only the real estate investment firms and developer firms will profit from it, but for example, Tesla is now building 2 factories, and they are saying that they are going to produce 11 million robots, Optimus robots, that can actually do physical things. So in the real estate market, you can look at maybe do inspections on buildings, maybe even building an actual building. I don't know how far we can go in that direction. This is more sci-fi than reality. But yeah, if they are investing so much in these factories, and if AI has come so far in the last 3 years, maybe that physical access of AI within the next 2 years is possible. If I look at the real estate investment market, and maybe specifically to an asset manager, I think that an asset manager is still needed. But I think that it will focus more on decision making, on strategies, and less about manual labor. So things like entering data, making sure that you generate a report from multiple sources. I think all these things will be done by AI. So I think it will be more about you look at the latest data, which it's something new. It's introduced by OpenAI. It's called a model context protocol. Don't want to go too much in detail, but if you are at home, just look it up. You can connect multiple systems in your own AI model, just your own Claude, your own Copilot, and then access all these different data sources in order to combine the data and do an analysis. I think this will be more the task of an asset manager. So less labor, manual labor, more decision, strategy thinking, all these kinds of things that you don't trust an AI, but still, because it's your own money, right? Are you going to let an AI rule over that, or do you want to be in control on that? And I think that will be more the task of an asset manager.
And what's your take on that, Marlijn?
Yeah, I'm happy to hear that even with AI, you believe that asset management is still needed. No, I believe that AI will mainly have an impact on the reporting side of our job. So reporting is super important for the investors, but it's also very time consuming and a lot of manual work. And I think AI will help automate this system of this process by transforming the data into the appropriate reporting format and the models. And as a result, the asset managers will be able to spend more time on reviewing the information and focus on the decision making rather than preparing reports. And it all starts with how we receive the data from the property managers. For example, within one fund, we work with 3 different property managers across the Benelux. So each one provides their own different format. And I believe that AI can help consolidate these different files into one. So we have one standardized format for Planon, and AI could also help compare these files. So let's say we do it every quarter, then maybe they can make a comparison of the data from previous quarter to this quarter, and then identify unusual changes or inconsistencies. And I think that would save a lot of time, and it would provide like this additional layer of validation. And yeah, of course, a sanity check that will always be very important, because we sometimes use AI for things, and if we check it, indeed, it's the data sometimes not correct at all. So I think a sanity check is very important. But if it could help with the manual work, it would be great. And I also hope and expect that AI would give us also maybe new insights on what we could do that we are not doing yet. And that's because they are able to analyze maybe way more data than we can, and also make combinations of data that we are not able to do. So this could help analyze the underwriting and the performance better, faster. And I think it will be very important for the future decision making as well.
And I guess, be interested to get both of your views on this. And thanks to everybody for putting the questions in the chat. I can see those there, and I'm going to come to those in just a second. Let's pick up with you, Dan, but interested very much to get your view on this as well, Marlene. So let's say if you could give the audience here either a tip or a mindset about, how they can improve their work, make things more efficient. What would that be? Let's start with you, Dan.
Yeah, to start, I think it's very good to have a look at your business processes that you internally run. Because we talk a lot about AI, but AI also has a cost, and these costs are in tokens. And nowadays, maybe you don't notice it, you just pay a monthly subscription, but more and more AI providers like Claude or OpenAI are changing the fee model. Instead of having a monthly subscription, you will pay for the token use. Tokens are the cost of the LLM model to think. So that's very important to know, because if you are going to try and run everything to AI, your token cost will increase. And the price of a token has increased the last few months massively, because the LLM becomes so powerful, it requires more and more and more tokens to process your prompts. So eventually you will reach a point in which maybe an AI model becomes more expensive than manual labor. So you have to question yourself, do I want to do everything with AI? Second thing is the AIs that you use are generative AIs, which means it creates something. If you run a data load every day from property management to asset management system, or on a quarterly basis, you have to report on your investments based on a fixed format. If you run this through AI, first of all, it will cost you a massive amount of money. An interface would be way cheaper. Secondly, it's generative AI, most of the models that you probably will use. So every day you have to fact check if AI interprets the data the same as yesterday. Even if the property manager didn't change anything in the data, it could be that the AI looks at it differently today because he used a different model than yesterday, and suddenly you have different results. So I would say to everybody, use AI for where you need it, and for everything that is very standard, consistent. I don't know if AI is the best solution. And the second thing is that start with your AI guidelines as fast as possible. I heard a story about a real estate investor that didn't have their guidelines in place. And other real estate investors, of course, use AI. Their employees were also thinking like, hey, I can speed up my work with AI. So they copied everything to their own email, went home, opened ChatGPT, private license, and drag dropped them in there. So if you don't have your guidelines in place in order to which AI model to use, how to set up security, I think you can't stop AI, right? It's in there, it's out there, everybody uses it. So if you don't have your guidelines in place, data security will become a thing very fast. So the earlier you have those in place, the better you are in control on the security of your data.
Yeah, and Marlene, what are the important things that you think listeners, attendees, people watching should be thinking about?
From my perspective, it is very important to have like a strong and reliable foundation, and I believe that this foundation is the underlying data. You can put poor quality data into in the best system, but if you will never get high-end quality analysis reports back, not even with AI. So I think that the data stored in that system, that's the most important thing. That's the basis, not only for asset management, because we're using it a lot for our forecast, but that same data will be used by the investment team for their underwritings, and also by the fund team for benchmarking whatsoever. So I think it's the basis of every investment decision, and I think that if that's correct, everything will follow.
Great. I'm going to pick up on some of the questions. I'll try to group them as much as I can, but let me just run through them for everybody. So we had one on valuation. So do you, in the valuation of buildings, take into account the experiences tenants have with the building and the property management? And also one on retention. Retention is very important. Happy tenants tend to stay longer. Do you assess this and take the outcomes of assessments in the risk analysis? Happy tenants means less vacancy. So I guess that's one on valuations, tenant experience, but also relating that to tenant retention. So I don't know if that's anything that anyone wants to pick up on.
Oh, I can pick up on this one. I think it's very important. As an asset manager, you should know exactly what your tenants are thinking, how they are feeling. It's very important, at least for us, to have a good relationship with them, and that says a lot about their wishes. And sometimes if you are talking with the tenants and they are just open about what they're feeling, and maybe they want to leave because something in the building is not correct, but we didn't know. And what if we can, repair it? For example, I don't know, climate is always a thing. Then maybe that they're happy again and they will stay. And I think also valuers take it into account. For sure.
I also think it's important that you also translate that directly into your financial modeling. Like if you have a capability to say what is the chance that a tenant will expire and leave, that of course involves then directly a vacancy period. If you have the conversation with the tenant and as an asset manager you want to update your assumptions, update them so that the whole organization then has the impact on the future financial performance of your asset and receives the latest data.
Yeah.
So I think it's not only having the conversation, but also immediately turn it into data so that the whole organization can benefit from that.
Great. There's a couple here as well. How do you position Planon versus other platforms with integrated financials? Question mark is one. And then there's another one specifically for you, Klaus, actually. Which says, Klaus, what is the expansion in the UK driven by? What's the offer? Is it unique or how different from competitors' offer? I've actually, as well, for anybody who's in the chat at the moment, I've posted a link to an interview that I did with Klaus about a month ago, which picks up on some of these. But for those who haven't read that, Klaus, maybe pick on that. And also, I suppose that one about how you position Planon versus other platforms in the integrated financials part.
Yeah, happy to dive into that a little bit more. First of all, and also explain a little bit in the beginning, our solutions that we built for commercial and residential real estate have one thing in common, and that is a cash flow engine. So we build a cash flow based on assumptions, fixed data, and we predict the future. So what will happen in the coming 10, 15 years, and that cash flow is used for the valuation of property, but also for decision making, optimizing the portfolio, etc. And I see a lot of similarities in the way we think about real estate in the Netherlands, of course, and Germany, because there's where we already have a presence, but also the same thinking in the UK. And that cash flow driven thinking that is in the DNA of our platform, and that resonates quite well in the UK market. There are other markets that have different standards, but that's why we see a big fit. Of course, a product fit is what we think of as the most important. Next thing is also that we, with Schneider and with Planon, on focusing on corporate and facility management, we do already have presence in the UK. So that's for us also, let's call it easy stepping up. We can benefit a lot from Schneider customers that are maybe the same audience, but different players, but they are focusing as well on the developers and the asset managers to make it more sustainable. And that's where we benefit from their presence to also position our solution. I think on the platform side, we are comparable with the competition. We also looked in the further development and the new development of our software. We of course also looked at the competition. What makes us unique is that we combine both the operational parts as well as the forward-looking part. So we connect the world of today with also the world of the future, and I think that makes us unique. And that's also where more than finance comes together. So also the ESG part where we discussed a lot about, it's more and more important how to deal with it and how to make the right decisions, etc. That's within our platform embedded. So that's also for our customers easy to use and to implement.
Great. That is all the questions that were in the chat. Thanks very much to everybody for that. Fascinating discussion. Really interesting to get down into the real detail of these things, which I often think is sometimes missing in these discussions. So fantastic to have you, Marlijn, and also you down there bringing that to this discussion. Really interesting. And thanks very much, Klaas, to you as well for the introduction on Planon and also picking up on some of those things, because I think it's really important to be able to get that perspective. This session will be available on demand. So if you're watching it here live, you can also watch it on demand at a later point. And if you're watching it on demand, thank you very much for watching. Fascinating discussion. Thanks very much, Klaas. Thanks very much, Marlijn and Dan. And look forward to seeing you at the next event. Thanks very much, everybody.
Thank you.
Super. And we are off air. Thanks, guys.
Yes.